Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. Welcome back to another weekly watch list video. I'm going to cover everything in this video for what we should expect for the week ahead in the stock market. So last week in our video, we were coming to the 50-day moving average on a lot of stocks and on the indexes. We saw that 50-day moving average not hold up, so now we traded under that. So that's just something we were looking at last week, and it ended up rejecting that 50-day moving average. Very important that you have these on your daily charts so you know where the possible support and resistance is. So getting into it, the earnings this week, very, very minimal. So not really interested in this too much. I'm sure some people are going to want to watch GameStop on Wednesday. NEO's also on Wednesday. So that's the earnings here for the week. Very minimal, like I said. Going to the economic calendar, also a welcoming sign. Very limited this week on economic data, which is great. Finally, a little reprieve before next week we have CPI. So Monday, the market is closed. I'm making this video on Sunday. So we have an extra day here to relax, enjoy. I hope everybody out there is enjoying with family and friends. And before I continue, hit the thumbs up for the video. It helps the algorithms on YouTube a lot, helps me out a lot, and I do appreciate you guys watching. So Wednesday, the beige book, that's basically all I would really be interested in here this week. Like I said, very minimal week as far as the earnings go and the economic calendar. There is one thing this week that you're going to want to put on your calendar before I forget. On Thursday, okay? So on Thursday, you have Powell speaking. It looks like 9:10 in the morning. So this is on Thursday. Mark that down. That always tends to move markets. Looking back at last week and the sector's relative performance. Again, we're seeing obviously another week, 3 weeks in a row now of a down market. So you're going to see there's the 1 week. And then again, on the one day on Friday, energy outperformed again. And that's after the jobs report. This seems to happen every jobs report that comes in good. Energy has an outperforming day, suggesting the economy is still doing well. And we saw follow through in the next week with energy. So again, keep that in mind. Decent jobs numbers. They beat estimates. The labor force participation kicked up. All really good news as far as the economy goes. Unemployment ticked up a little bit, which is good for the Fed. They want to see that go up. But that's our sectors here. And again, technology got killed for the week. So that brings me to what I want to show you guys with the bond market. Very important that you guys follow the bond market and how it correlates into the NASDAQ, which is the tech stocks, and the overall market. Because back here, and this is just a graph here of the US 10-year Treasury note and the yield compared to this yellow line, which is the NASDAQ. You can see here when we bottomed out here on the 10-year, the NASDAQ started to really rally. And then back the beginning of 2022, right when the 10-year started to try to break out, and this was only at 1.50 at the beginning of the year, doubled to now over 3.19 right now. and the NASDAQ has gone the total opposite. So you have just an inverse correlation here. But back here in 2020 and 2021, look at how low the 10-year was. I mean, crazy. You have a low here of 0.52. So during these years here, when the yield is so low on the 10-year, you have something called TINA, which means there is no alternative. Everyone was putting money into the equity market. Once bond yields get attractive and you can collect on that yield, well, then the equity market starts to come down. And that's what we saw here. And, you know, to be honest, once a Fed goes into tightening mode and they're raising rates, that's what's going to happen. So the bond yields are just going to go way up, and they're going to try to predict where the Fed funds rate will be. And especially the 2-year is definitely used for that. But back here, you know, you can just tell it was so low. I mean, there was no alternative. Equity market got all the attention, all the money, and now that's starting to inverse. So just wanted to go over that. Maybe if you guys didn't know that. Let's get into our compass. So this is the SPY. This is the daily chart on the SPY. And like I said, last week, we had this candle right here, a very indecision candle there. We were still over the 50-day moving average. So yet last week's video was all about, will the market stay over the 50? It didn't. We ended up breaking the 50, retesting the 50, and then dropping even further. But what we have here is we have a support level 1, which I just wrote out as our first level here of support, that happened to be right where we retested this 50-day moving average and had that huge run up. So we retraced that entire move right back to this breakout here. So we broke out, we retested, and then broke out even further. A full retracement, but it came to this ascending trend line. And if we look at this on the 1 minute, look at that. Boom. Right at the close here, just before the close, got a huge bounce off of that trend line. So this is something that we're going to keep on watch for this week. This 390 level looks like it's trying to act as support. The RSI is getting really oversold, right? So the market's not going to go straight down forever. If we break 390, this is the next level. I have support level 2. It's a weekly level at 380, where I've seen volume and definitely a demand zone. So if this breaks, 380 is the next spot down. If we want to look at this on the weekly, you have the weekly ascending trend line hit to the penny. All right. So these are our support levels, and this is the current pullback, which was huge. So you had a nice run up, but now we're back to just about 18–19% off the high for the year. So still very much bear market, very much a bear market rally. But all we're looking for is where we might see support before, either settling down in the market or that next run. Because like I said, we're not just going to come down forever. We need to find out where these bounce spots are going to be. We did a great job back here 3 weeks ago calling this trend line and that rejection at the 200 moving average on the daily chart right here. So we just have to wait and see this week. The RSI is definitely getting very oversold. So I expect some support to come in around here this week. It would be great if we saw that support and then started to trade higher off of that. But right now on the SPY, 390 and then 380, if that ends up breaking, should act as some support. If that breaks, you know, then eventually we come down and we retest these lows. But right now, this is holding up, which is good. So that's the SPY. On the Qs, same situation that I've noticed here. There is an area here where there's demand. You can see here, this is very similar to the SPY. We broke out of this resistance, retested it, went up from there, retraced it, and now we're kind of stopping here. If the bond yields continue to come back down, we saw them rocket higher at the beginning of the week and start to come back down. If those come back down, you can start to see this tech market settle down a little bit and possibly trade back up to this 50-day moving average. So right now, definitely sitting in a bit of demand. Wouldn't be surprised if it broke lower, but as of right now, it does look like this is going to be trading really inversely with those bond yields. So keep those in mind. So that's the Qs. On the Dow Jones. On the daily chart, another just bearish engulfing candle. Not much to say here. We're getting oversold. Another rejection at the 50-day moving average. It's just every single index just could not hold up that 50-day. Same thing here for the Russell 2K. Broke the 50, rejected at the 50, and then pulled on back. So this is what we're seeing in the market right now. But you can see here on the RSI, we're heading straight down. There will be a bounce at some point. We have to wait, be patient for the bounce. And then when you get that confirmation that there's some support, that's when you can take this back long. So everybody's going to be watching. Will we retest lows, or will we start to bounce up before that? That's everybody is just waiting to see what happens there. So it's making predicting the direction of the market a lot more difficult, especially when you get rejections like this at the 50. Every index now is trading under major indicators, which is very bearish. And you have everybody that's going to be coming back after Labor Day weekend, the unofficial end to the summer. You're going to have a lot more volume, a lot more traders that are starting to, fix their portfolios for the midterm elections and everything else. So it's not going to get much easier from here, but I do expect a bounce at some point. So we just need to be aware. Once we get that low on the RSI, we've always come back up. But it's what do we do on Tuesday when the market opens? Do we open lower and see a rally? Wait until you see those dips get bought. So around 10 a.m., 11 a.m., if the market is weak and you see dips get bought, that is a very good sign, and watch that volume. All right, so those are the major indexes. Now, last week, we had our picks for the week that I need to obviously go over, because once again, nailed them on the head. Really nice job last week. So we're going to start with Google. This was written last Sunday, so the 28th of August. After rejecting resistance and breaking under the 50, next level of support should be 103, 105, as it's been consolidating in this range here. So you can see this range that Google is in. So, and then on Apple, same thing. We saw the rejection there at the 200, And if that can't hold up, the 50 moving average would be the next area of support at 155. All right. So going over here back to our Thinkorswim, Apple. Well, what do you know? 155. A lot of these stocks, they like to test these key indicators. So if the 200 doesn't hold up, which is what we were looking at here on Sunday, then that 155, I mean, just about to the penny, we called that one. So that's really good. I'm going to get back to Apple in a second because this one is going to be still on our watch list. They have their iPhone in-person conference this week. That might have a catalyst for Apple as well. So Google here, we saw the sell-off and then the consolidation and then a further sell-off, closing the week at 108, let's just call it. You have down here to 104, 105, where you should start to see support. If this consolidation does not hold up here, you almost have a guaranteed retest here at about 105 until you can see a bounce if this consolidation can't break out. So that's Google. Another one that we had last week is Amazon. This was really, really solid. Good technical analysis here. We have, after it had trouble at the 200, now gap fill is looking even more likely with the 50 moving average at 124. They want to test these levels. Investors want to wait and see if those levels can hold up before they get involved in the stock. So looking at Amazon, that's exactly what happened. We got the gap fill, another solid trade. So for this week, going back to Google, I want to watch and see if this gets a bounce here. If it does with strength in the market, this could be a very good entry spot for Google. Apple, same thing. Like I said, this 155 area to 150, this could be a very, very nice area for a relief bounce as well. Like I said, the whole market is oversold on the RSI. It's just really dropped quickly. So it's just a matter of time before you do see a little bit of a relief bounce. Wouldn't be surprised here if Apple sees something this week that bounces it up. So that's Apple and Google. Those are just from last week, the week before. Let's look at Tesla. Same thing I see here is it's trying to hold up at the 50. If that breaks, you have this area here where there should be support between the 250 and 260 area if the 50 breaks. And this could be a really nice entrance for a market bounce into year end. So that's Tesla. Microsoft is the next one up. This is sitting at a very nice ascending trend line, hit to the penny here, very oversold. This would be an excellent play long, depending on how the market holds up, because you're at an ascending trend line, you're at very oversold levels, and it's Microsoft. This is a terrific company. You might see a bounce, at least a relief bounce, to catch a trade on. So that's Microsoft at ascending support. XLE, another one. We had this on our watch list now for a very long time. Calling this, higher highs, right? Higher lows. You now had the pullback, like I said here, taking the profit, coming back down to the trend line, and now starting that next uptrend. So XLE, I have long also, at least to retest these highs at some point right here. So XLE, very nice, clear direction until direction changes. This cannot be shorted because you have that clear higher low, higher high, higher low setting up. So that's got to change before you get short energy. All right, so that's XLE. And then we're going to end it on Pfizer. I really, really like this one here. Very oversold RSI. Previous lows on the year got hit. This channel that we're trading in has been very well respected from the top right here to the bottom right here. So you have a pretty low risk. If you want to take Pfizer long, you have a pretty low risk entry over here and not a bad investment, especially coming up into the fall. They have their new shots on the way. So I do like Pfizer here at the bottom of this channel to come up and at least test these indicators. So that's Pfizer. All right, guys, thank you so much for watching. I know it's a lot of information I try to get out there pretty quickly because these videos can go on a long time. So bear with me, but thanks for watching. Hit the thumbs up. And if you're new, subscribe. Take care, guys.